Hi, good week to all. Welcome to this weekly technical outlook on the major stock indices. I do understand that last Friday we do have some very interesting price movement across the board, where we may see a bit of hesitant or a bit of negative feedback loop on the ongoing reflation trade that is taking place across global asset classes, where we start to see a kind of a sell-off in the US major stock indices that is kind of spilling over towards in Asia session this morning as well. So I believe that most of us is trying to find out, has the medium term uptrend for the for the major stock indices reversed to the downside, or has it still has potential to actually stage a further up move from here. So in this weekly technical outlook, I will share with you all the key levels to watch as well as the ongoing trend bias of these major indices. So before we start, let's take a look at the disclaimer slides first. Okay, let's go. So let me bring you to our CMC markets trading platform. So first and foremost, the first proxy to actually take a look at this ongoing risk on or risk off effect, or I would say trend bias on the stock indices. We'll be taking a look at one of the growth proxy, which is the Philadelphia Semiconductor ETF, telling us an indication whether the medium term trend, has it reversed to the downside or the upside. So as we followed in my previous videos, I've been highlighting this ongoing bullish bias, at least in the medium term. We're talking about 1 to 3 weeks for this Philadelphia Semiconductor ETF. So last week we have a target at 421.90, which is the resistance. So last week high was actually at 419.29. So give or take is almost actually hit this upside resistance or upside target that we highlighted last week. So we start to see a kind of a bearish candlestick on last Friday, with the daily RSI hitting a kind of a extreme overbought level, as well as seen in this ongoing major uptrend that has taken shape since 18th of March 2020. All right, so this is the, I would say that we in this major uptrend. The daily RSI has hit an extreme overbought level, the highest since 18 March 2020. So what does it imply over here is that potentially upside momentum is kind of overstretched at this moment in time, where we could see a kind of a sideways consolidation on this semiconductor ETF between 42190, with support coming in at this 379.95, which is corresponding to this medium term ascending channel support that is in place since 28th of October 2020. No clear signs of a kind of a major exhaustion yet, as there's no bearish divergence seen on the daily RSI indicator. It's only indicating to us that it has hit a kind of a extreme overbought level, and now it's trying to work out this extreme overbought level in the coming weeks ahead. So more of a kind of a sideways consolidation first between 42190 towards this support at maximum at 379.95. Then thereafter we should see another potential up leg to target the next resistance at 442.70. All right, so overall in terms of global growth proxy, taking this Philadelphia Semiconductor ETF price action more sideways versus a kind of a major bearish reversal to the downside. Now let's move on to the SPX 500 index. Okay, so on the SPX 500 index, pretty much unchanged, as we start to see a very slow churning up movement since the start of this year, a series of higher high versus higher low. RSI over here pretty much flat above the 50 level mark over here. No clear signs of a major or medium term bearish reversal as seen on this SPX 500 index. Now moving on to the strategy chart. So from this strategy chart over here, what we could see is that last week we have a tightened key pivotal support at 337.22. Last week on Friday we see a kind of a a kind of a dismal performance where the SPX actually slide from 38 figure all the way down to 3750. So what's interesting over here is that the 4-hour RSI is now coming back to a support level at 32 level, also close to the oversold region, where previous we call it level that actually give rise to a rebound as seen on the price action of the SPX 500 index, one on the 4th of Jan, also on the 21st of December, as well on the 11th of December last year. So all in all, the strategy for this week remains unchanged for the SPX 500. Still maintain that bullish buyers holding above 37.22 key medium-term pivotal support, looking for a potential upleg to target the next resistance at 38.80. Okay, now going forward on the higher beta NASDAQ 100 index. So NASDAQ 100 index still pretty much unchanged, as well doing a series of higher high as well as a series of higher low on the NASDAQ 100. Okay, the NASDAQ 100 index. RSI still pretty much sideways, holding above the 50 level. Strategy chart wise, over here pretty much unchanged, similar to the SPX 500. As long as the Titan key medium term pivotal support holds at 12,640, we are still looking for a further potential upside to target the next resistance at 13,350, which is also what you call it, a 1.236 Fibonacci expansion level, as well as the upper boundary of this medium term ascending channel that is in place since 10th of November last year. And what's so interesting on the 4-hour RSI is after that shake out from overbought zone as seen earlier last week, the RSI now is back to some support at the 32 level, similar to what we see on the SPX 500 and also close to the oversold level. So what it means in terms of momentum wise, that the previous we call it previous medium term upside momentum on the extreme level seems to have already been work out on the downside, where we may start to see potentially a revival again of medium term upside momentum in this coming week for the US stock indices. But bear in mind, today's session will be a more reduced session on the US stock market, as the main cash market is actually closed for a public holiday today. All right, now moving on to Asia. So one of the index that I highlighted in my weekly outlook since 2 weeks ago is to keep a lookout on the Hang Seng index, which is in our platform called the Hong Kong 50, looking for this stellar outperformance since the bullish break 2 weeks ago, as seen on this major descending resistance that has kept previous rebound in April 2019 and Jan 2020, linking its all-time high level in January 2018. So very clearly has really broken to this upside at 26,740, 27,400, where now we see a kind of a momentum play going into this laggard, pushing this index to actually outperform the rest of the major indices. So in fact, today right now is actually up by another close about 72%, outperforming the SPX 500 and the NASDAQ 100 as we talk in today's Asia session. So now going to the strategy chart that I have for this week. So bear in mind that if you could recall that last week we have a resistance level target which is at 28,700 slash 29,090. Now right now it's trading at 28,691, coming very close to the upside target that we highlighted last week. So now let's take a look at the 4-hour chart to see is there any signs of bearish or bullish exhaustion, even though it's coming very close to the resistance that we highlighted. Fortunately, no clear signs of a bullish exhaustion yet. 4-hour RSI remain bullish, holding above this ascending support level, now at 58 level. A series of higher lows, hasn't reached an extreme overbought level as well on the RSI, indicating to us that the ongoing medium term to short term upside momentum has yet to be overstretched. So what we do over here for this week is that we actually maintain this bullish bias that we have since 2 weeks ago, where I will tighten the key medium-term pivotal support to 27,750, looking for a further potential push up to test this 29,090 level. Above it should take us higher towards 30,060 slash 30,280. All right. which is equivalent to the one-time Fibo expansion level since the low of 25th of September, as well as a key medium-term resistance. Let me take out the daily chart of this 30,000 to 80 level, okay, which is all right, which is at this level, 10th of April towards this 30th of April 2019, which is equivalent to this 13,280 level. So we are looking for a further potential push up in these coming weeks, 1 to 3 weeks, to actually retest this zone, this swing area itself. Now moving on to the next index, which is the Nikkei 225. So in our platform we call the Japan 225 index. Okay, give me a minute to load. Okay, so as we highlight as well, the Asia indices actually one of the outperforming index to actually to actually has already taken shape since the start of this year. If you could recall on the Nikkei 225 or the Japan 225, last week we have a target at 29,440. So last week on Thursday, it actually hit a high on of 28,984, give or take, is coming very close to the upside target or resistance that we highlighted last week. Is there anything scary that we should actually be afraid of for this coming week for the bulls? Fortunately, no. We don't see any signs of a kind of a medium-term bullish exhaustion yet. Daily RSI is still pretty positive, holding above this ascending support that is in place since 28th of October. No clear signs of a kind of a bearish divergence on the daily RSI indicator. 4 hour chart or the strategy chart that we have. So on the 4 hour chart, if we could actually look on a what you call it a multi time frame approach on one fractal lower than the this daily chart, since the 30th of October 2020 low, it has been kind of evolving in a medium term ascending channel. Last week, we call it a Friday sell-off, actually coincide with this sell-off in the US stock indices. What's interesting over here is it's now coming close to this oversold level, and as well as this ascending support right now on the 4 hour chart, 4 hour RSI, pardon me, at the 14th level. Nothing we call it indicating to us that there is a potential change of this major and as well as medium term uptrend that has taken shape since 30th of October 2020. So what we have for this week is that we will tighten the key medium term pivotal support up to 27,700, which is the former swing high area of 29 December 2020, as well as this ascending channel support that is in place since 30th October 2020. Looking for a further potential upleg to test 29,440. Above it should take us higher towards 30,340, which confluence with a cluster of Fibo expansion level, as well as the upper boundary of this medium-term ascending channel that is in place since 30th October 2020. All right, now moving on to the German 30 index, which is the DAX. All right, so the DAX is kind of a pretty much flat last week. Over here, not much major change as it continued to churn sideways, but continue to actually evolve within a series of higher high as well as higher higher high and higher lows since the bullish breakout seen on the 21st of December last year from this kind of ascending range resistance that was acting as a that kept previous push up since 20th of Feb 2020. So what we have on the strategy chart is that we will maintain the key levels, no change on the medium term pivotal support, which is at 13,430. So what's interesting is after late last Friday sell off, the 4 hour RSI is now back at its oversold region, looking for a kind of a potential revival in short to medium term upside momentum again. As long as this 13,430 holds, potentially we could see another up leg to actually target the resistance at 14,315. Above it, open up scope towards 14,620/730. So in a nutshell, all in all, even though we may see a bit of negative feedback loop on the major stock indices on Friday, but however, if we will take a look at the bigger picture and those key elements that I highlighted to you earlier on the major stock indices, as well as one of the growth proxy, which is the Philadelphia Semiconductor ETF index, from the medium term perspective, we do not see a kind of a change in the medium term trend, which is, i.e., the uptrend for these major stock indices remains intact as long as the key medium term pivotal support holds, which I highlighted to you earlier in this video. So I wish you have a great trading week ahead, and I'll see you all next in my next video.